If you have $500,000 or more invested, chances are you're paying more than you realize, not just in fees, but in missed opportunities. This happens because the advice that you're receiving is only a piece of the puzzle. This is what I call fragmented advice. You meet with your advisor once a year to discuss your investment portfolio. You only speak to your accountant when it's time to file your income taxes, and you meet with your lawyer only when it's time to update your will. Or if you're like many Canadians, you may not even have that. This lack of coordination and communication can quietly be costing you tens of thousands of dollars every single year. My name is Quentin Chambers. I'm a certified financial planner, chartered investment manager, and wealth advisor. And over the last decade, I've been helping families and business owners simplify their finances, cut costs, and build strategies that give them confidence and peace of mind. And over the years, what I've seen time and time again is that people are paying full service advisory fees for only receiving a piece of what they actually pay for. Normally, it's limited to investment management and retirement planning projections. The real value you're missing is an integrated approach to planning. It's making sure that you have a process and approach to cover every area of your financial life, and more importantly, that everything speaks together relative to the betterment of your financial future. It's making sure that you have a proactive tax strategy, understanding how you can save for and then withdraw from your retirement funds, making sure that you understand the risks that you face, you have all the proper coverage for it, and most importantly, you have a coordinated strategy between your legal, tax, and investment advisors to make sure that everybody is on the same page for your financial betterment. Not having that is a true cost of having fragmented advice. Here's what many households look like: investments at a bank or with a broker, insurance with yet another provider, an accountant that you only speak to file your annual income taxes, a lawyer you only call every 5 to 10 years to update your will, or worse, you might be one of the 50% of Canadians who don't even have a will or power of attorney. None of these professionals are bad on their own, but without proper coordination, you become the project manager of your financial life, trying to connect investment advice with tax planning and estate law and different insurance strategies. Unless you're a financial professional yourself, that's a massive job and responsibility. And if some of these things get missed or done incorrectly, the stakes are high. So let's break down 3 of the major hidden costs of fragmented advice. Number 1 is going to be a duplication or overlap in fees. Now, understanding what you're actually paying in the world of financial advice is so important because there are going to be a few different tiers. We're going to start first with your investment management. Investment management is charged in a few different ways. You could have your MER, which is your management expense ratio. You could have your portfolio management fees, or if you're like a DIY investor, the trading commissions that you have on your individual stock and fund positions. If you're receiving professional investment advice from a fee-based advisor, you could also have their advisory fee, which ranges from 1 to 1.5% depending on your specific situation and what the advisor actually offers. In addition to that, there's your annual accounting fees and lawyer fees, and all that together can add up rather quickly, and you may be paying more than you think. And that's why without a coordinated plan that is mindful of costs and tied to your bigger goals, you'll leave money on the table, which means you'll be working harder and longer to get to the life you want. Number 2 is the lack of a coordinated tax strategy. Now, if you're only talking to your accountant at tax filing time, you're likely missing out on some key tax planning opportunities. There's examples like maximizing your credits and deductions and making sure that you're maximizing everything across your household. And if you're a business owner, making sure your personal and business tax strategy work together. Without proper coordination and a focus on long-term planning, the risks of mistakes and missed opportunities go up. Done right, your accountant and your advisor are seamlessly working together to plan and coordinate your tax strategy, not just for this year, but for years to come. And then we have number 3, which is estate clarity. If your estate plan is designed and then regularly reviewed alongside your investments and insurance, your assets may not flow to your loved ones exactly how you wanted. That's why having an integrated approach to planning makes sure your wishes are clear, tax efficient, and aligned with exactly how you want. Now imagine you didn't have to coordinate between 4 or 5 different professionals. You had someone to quarterback your financial life to make sure that everybody is working together. True integrated planning is known as a total wealth strategy. The total wealth strategy is having a team of wealth management professionals who come together to make sure that you have a coordinated approach to cover every area of your financial life. This is an internal team of tax accountants, estate and trust professionals, complex credit specialists, insurance specialists, portfolio managers, and financial planners. It's about bringing all of these subject matter specialists together in one place to provide an integrated and seamless planning process for you at no additional cost and in coordination with your external professionals like your accountant, the lawyer, to make sure that everything is aligned. That's why by stepping into a total wealth strategy, you can have every area of your financial life connected. You can work with subject matter specialists that coordinate with your external accountant and lawyer to make sure that everything is perfectly aligned. If you want to know what the cost of fragmented advice may be costing you today, download the free self-assessment tool below. And as always, thanks for watching.